Hello, future home buyers. Today we're going to talk about what it will take to qualify for a USDA loan. And I'm sure you're watching this because you know of the major benefit of the USDA loan, which is zero down. And you likely also know that it's for homes being purchased in a rural area. So in the upcoming chapters of this video, we're going to talk about the most important topics that you need to know when it comes to qualifying for USDA loans. So let's start. In the first chapter, we're going to talk about citizenship and residency. So you need to be a U.S. citizen or a permanent resident alien. So that's what you would need to, from a citizenship perspective, to qualify. And then residency, the property or the home you're buying must be your primary residence. It cannot be a second home, and it cannot be an investment property either. Okay. The next section here, the next chapter is going to be the property requirements. It must reside in a rural area that is designated by the USDA. And if you're not sure, you can follow the link to the article that I will be linking to down in the first pinned comment and also the description about USDA loans on our website. And you will be able to use the lookup tool that we have linked in there to determine whether the address in question falls within the rural area. Now, it's important to understand that when you may be living in a town that you consider to be rural, but let's say the town's got a little Main Street section, right, where there are quite a few homes right in that little circle by Main Street. Those homes may not be considered rural, possibly, but then as you drive farther away from the center of town, then those homes may be part of the USDA designated rural area zone. So that's why you can't just say the town is considered USDA. You need to look it up by property address. And then also on the lookup tool, when you do look it up by property address, it's going to show you a shaded area on the map, and you can get a good feel for the entire area within a few miles radius, what the USDA designates as rural. Okay. The other thing about the property is it cannot be used as a farm, a working farm, or for business. So let's say even if you're not a farmer and you have a plumbing business and there's a separate building on the property, you can't use it as your shop for your business. So that can't happen. This has to be just primary residence use only. So let's move on to the next chapter, which is loan limits. Unlike FHA loans, USDA loans do not have specific loan limits. Now there's a catch to that, because I'm going to talk later about income limits, and you're not allowed to make more than a certain amount of money to qualify for a USDA loan, which means at some point you're not going to make enough money under the income limit guidelines to qualify for too high of a mortgage amount. So the system, or the guidelines, all the guidelines connected together in totality, will basically limit the loan amount that you can get, but there is no specific limit referenced. So the next chapter, we're going to talk about income requirements to qualify for a USDA loan. There will be income limits. So we're not talking about the minimum amount you need to make, because your loan officer that you work with will figure out what your buying power is. But you can't make too much money, as I mentioned earlier. And I'm going to read the guidelines specifically for you here. Your household income must not exceed 115% of the area's median income for a guaranteed USDA loan, or 80% for direct USDA loans, according to the USDA website. And I'm also going to put a link to where you can do the income lookup for that area, so you know what the maximum income amount is to qualify for a USDA loan. The other thing is your income must be stable. So you cannot have too many gaps in employment, job hopping, or you have a type of job where you make money for 6 months out of the year, and then another 6 months out of the year you don't make anything. So your income needs to be deemed as being stable. Now, it doesn't mean that gaps in employment won't be accepted. Many lenders do not accept gaps in employment. We can help you even if you have a few gaps. Let's say you quit your job, or you lost your job, or you're relocated, and in the process you weren't working for a couple of months. We can make that work for you. Well, while other lenders will require you to be at the same job for 2 years in a row, and that's what their requirement is. And your debt to income ratio should be in the 40s, low to mid 40s. You can find a lender who can go higher than that for you. And if you're struggling to qualify for enough, then just visit us at Dream Home Financing and we'll help you with that. So when we talked about a 2-year work history, you need to demonstrate having a 2-year work history we can help you even if it's not at the same job within the last 2 years. So the next chapter we're going to talk about now are credit scores. So the USDA does not outline a specific minimum credit score. Like FHA, you cannot have scores below 500. But although the USDA does not dictate a minimum credit score requirement to qualify for the loan, what you will find is that virtually all of the lenders have their own minimum that they're imposing. So they may not accept applicants whose scores are below 620, for example. 600 seems to be the lowest that most lenders will go. It's just difficult because you've got the zero down thing, and there's a lot of risk on the part of the lender lending money when you're not putting anything down, and there's also no mortgage insurance, there's no PMI. So therefore they typically look for a little bit higher credit score to qualify for a USDA loan. Now let's talk about the next chapter, the cost to close. So again, there's no down payment required, so you don't have that. Gift funds can be used from a relative. So a relative can provide you with some money to use towards closing costs. That's permitted. And also seller contributions are permitted. So your seller, maybe you negotiate that you'll pay their full asking price, but you need them to pay for your closing costs. You could expect closing costs to be anywhere from 2 to 4% of the loan, depending on the loan amount. That's just the way it works. Usually the lower the loan amount, the higher the percentage of the loan the closing costs will be, because you have a lot of fixed costs like an appraisal and things like that. But you should budget anywhere from 2 to 4% of the closing costs. So that sums up the most important elements of how to qualify for a USDA loan. And we would love to help you. If this video was helpful, we do wish that you would hit that thumbs up button, and we'll help you to qualify. Just visit us at dreamhomefinancing.com. I'm linking down below in the first pinned comments and also the description. Appreciate you watching today, and we hope you stop by and see another one of our videos.